Hi, I'm Joel Gilgard with Gilgard Analytics. Thank you for tuning in to this YouTube tutorial on asset classes and economic indicators. And this file is available to everyone out on Gilgard Analytics website, and it covers data, annual year-end data between 1989 to 2022. And so it looks at 5 various asset classes and economic indicators in US dollars, and this is from a US perspective. And so this historical data is available both in adjusted and unadjusted prices. And what I mean by that is the adjusted prices have been basically used the Gilgard inflation adjusted dollar. And so you can see how it's done vis-a-vis other currencies and vis-a-vis inflation. And so another way of basically describing this is as a fruit portfolio where you can compare an apple to an orange between various asset classes, with today versus 15 years ago, or cubistic analytics, where you look at things from different perspectives. And so I'll just go through quickly the number of items, and we'll divide this show into 3 different segments because it would be too long otherwise. Here I'm just going to go through the various components, very, very high level, what they mean. And so we'll start out with the US dollar index. And this is a basket of currencies summed up, weighted against the US dollar, and you have the euro, you have British pound, Swiss franc, you have the Swedish crown, you have Canadian dollar, Australian dollar, you have the Japanese yen, and you also have the New Zealand dollar. And then I also include the US Class A. So this is the first class stamp price. And this is for putting together the Gilgard inflation adjusted dollar. I also use a stamp smoothing technique where, because the price of a stamp doesn't always change every year, sometimes there'll be a jump from 25 cents to 33 cents. So obviously this adjustment is post hoc. I have to wait every year. I adjust it somewhat. And then you adjust the stamp price with the price it was 34 years ago. So you get a ratio there. And so you take that and multiply the US dollar index, and that gives you the Gilgard inflation adjusted dollar. We'll be showing you samples of this later on. I also look at the price of Barron's, the yield of the 3-month Treasury bill, 10-year note, basically AAA bonds. Used to be Moody's, now I think Barron's that I get it from. Barron's intermediate grade, the yield curve ratio, yield spread, the Commodity Research Bureau Index. And so this was probably 3-4 years ago. I did an analysis on inflation, US, and I looked at somewhere between 20 to 30 items. And the average of those price increases, they followed the first class stamp very, very accurately. So hats off to the folks at the U.S. Postal Service. They know a thing or two about inflation. We look at natural gas, oil, coal, uranium, real estate prices in Minneapolis, real estate prices across the U.S., farmland, so 1 acre, silver, gold, copper, iron, ore, steel, zinc, aluminum, corn, lumber, S&P 500, NASDAQ 100 composite, Dow Jones Industrial Book Value, Dow Jones Earnings, the Dow Jones Industrial Average, the Dow Jones Utility Average, the Dow Jones Transportation Average, Philadelphia Silver and Gold Exchange, and then also the ratio of gold to silver stocks. How much are the companies diluting their shares? The Gilgard Equity Index. This is an average price of 26 global equity indexes, and they are adjusted to the Gilgard inflationary dollar, and they're also equally weighted. Gilgard Metal Index is an average price of 5 industrial metals, equally weighted. Gilgard Agricultural Index, price of 8 agricultural commodities, also equally weighted. Gilgard's yield curve ratio is the 10-year bond over the 3-month yield, and these are for 14 international countries. And so this is just to give you an understanding of where the U.S. interest rates are vis-a-vis other countries. We have Gilgard's yield curve spread. So that's the simple, you take the 10-year bond yield minus the 3-month yield. As of October 2nd, it's negative at least a full 100 basis points. The Gilgard short-term yield. So this looks at the average 3-month government yield for 14 countries. Gilgard long-term yield. Again, look at 14 countries, and you might be asking me, why are we only looking at 14 countries? Those are the only countries that I have information covering a generation, 14 years. Gilgard Currency Index. And so this is the same number as stock markets that I cover. It's 26. Gilgard Unemployment Index. This is just a summary, equally weighted average of 40 global countries, what their unemployment rates are. And this is to give the U.S. citizen an understanding of where they're at vis-a-vis other countries. We look at U.S. population, and this is a number that can change from year to year. It's not always accurate when the numbers first come out, so the further back in time we go, the more accurate it is. Gross domestic product per capita, which I think is a more interesting number than just the raw GDP. New home sales, new homes per capita, much more interesting. We also have the ratio of house prices to rent. So this is to just give you an inkling. Is it more beneficial to rent versus to buy a house? And then we also have rents, capacity utilization in factories, U.S. federal debt billions, U.S. federal debt percentage change year over year, which I think is more important. The U.S. unemployment rate, annual car and light truck sales, vehicle sales to population, U.S. federal debt to GDP, military spending percentage of GDP, military spending, U.S. dollars, and the military spending change. And this is the one that's of real interest. And so the debt, right, and military spending. Everyone understands that the more you rake up debt, the worse it's going to be, right? But in the short term, using more debt is good, right? It'll produce greater short-term economic movement. We also include the years when you have Republican versus Democratic presidents. Dow Jones Industrial Average over gross domestic product. The Gilgard's Big Mac Index. Just look at the number of countries' average price of Big Macs, adjusted by Gilgard's inflation-adjusted dollar. And then we have Gilgard's stock market barometer. And that is something we just look at the average, the number of ups to downs stocks every day, and this gives you an indication of how frothy, how negative currently is. So we'll go into graphs, and then we'll pause this recording, and then we'll go into the second recording. So this is the cycle value graph. And the way to read this is for year-end 2022 key asset indicators. Just couldn't put all of the 68 or 70 or so different key asset indicators or economic indicators into this graph. But the way to read this is anything, now bond yields are slightly different, right? So here the bond yield is above average, which means that it is currently a positive, because when Federal Reserve lowers interest rates, market tends to do better. So here, the 10-year government bond, the interest rate there is still below average, right? So it's a negative, because from here, it just needs to go up. And that's the same thing with the 10-year AAA and the 10-year intermediate. Now here, now we're switching away from yields. So the CRB, Commodity Research Bureau prices commodities, it's below average, as is natural gas. Oil is above average. Coal is way above average. Minneapolis real estate prices are above average, and prices of U.S. real estate are way above average as well, as is farmland, silver, gold. Lumber is below average. With the interest rate hikes last year, market is forecasting that there will be less need for lumber. Dow Jones utility average, industrial average, way above average. Transportation average is pretty high. Philadelphia gold and silver mining companies, they're below average. Gilgard Equity Index is above average, as is the Gilgard Index. Agricultural Index is priced fairly, and so we have Gilgard short-term yield. This is a compilation of 14 countries. They are still below average, and Gilgard long-term yields, they're also way below average. Next chart here is the S&P 500. In case you're wondering, it's adjusted for inflation. It has, most other countries, they go up and down. They just cycle around in terms of inflation. But the S&P 500 has been going up quite a bit this past generation, with some ups and downs. So we had 2001, 2008. Now, recently, we had a rather big decline. So this is just to give you a perspective of what it looks like adjusted for inflation. So in real terms, what this tells you is, you would have invested about $400 today. You would have about $1,600, so fourfold increase. Again, adjusted for inflation and what the dollar is worth vis-a-vis other countries. Natural gas, adjusted for dollars, means that supply today and demand today, as it was 34 years ago, pretty much on par. We had a period here during COVID where demand went down, as did prices. That seems to be back up. Lumber prices, as we mentioned earlier, they fell quite a bit. They're undervalued vis-a-vis its historical average price. They haven't hit rock bottom. U.S. GDP per capita hovered around 23,000 for quite some time, and then with government stimulus, expansion of the economy, it grew to about 31,000. So it hits, and that basically we're at the same number as we were in 2016. And again, this is in Gilgard inflation adjusted dollars. Now, if you go back, you look at this number more, historically going back to 1915, this number can really go up and down, or in inflation. So these are relatively good times. Doubt about it. This is an interesting chart. This is U.S. home sales in thousands. That was way off before. This is, so basically the U.S. builds about 1 million a year, give or take. And this number has, over the years, since the population has increased so much, there is definitely a shortage of homes in the U.S. Not to mention U.S. car sales. Basically, it's been on a downward trajectory since 2015. Not sure what this reflects. It can be, cars last a lot longer. They're built better. It can also be because Americans don't buy that many American cars anymore. They buy foreign, domestic, imported cars. They're of higher quality, cost more, they last longer. It could also be that fewer young people are deciding to get driver's licenses. It can be that people just can't afford to buy new cars. It's a slew of different variables. And here is the Gilgard Stock Market Barometer. And this is just an accumulation of the number of shares that go up versus go down day. The theory behind this is when you have a negative number, market is not giddy. It's depressed. And that's normally a good time to buy when nobody else wants to buy. Had here, like 1999, had a long period of up days and stocks that went up versus down. So it became expensive. And so this type of euphoria that we had from 95 to 2001, we haven't really seen since. So we had a period here of long upturns. Then we had a period here of very long downturns as well. But basically we'll be able to see, so what I'm trying to say is that, in my opinion, the market as of 2022 is not euphoric. It's high PE ratios. That's the least, one of the least of my favorite forecasting tools. It's just too unreliable. It's nothing. This one, on the other hand, is. Okay, so we'll put a pause here on the first episode of Asset Classes and Economic Indicators. I appreciate you patience for listening to me. If you have any questions or comments, please let us know. And we'll see you in the next episode. Thank you.